New contracts for home purchases are coming in very low this month. We counted 10% fewer home sales for the week than the same week a year ago. 10% fewer. In the fourth quarter of 2024, sales were coming in at 5 to 10% more than the year prior. So those sales gains have evaporated and even reversed. Buyer activity has been dropping for several weeks, and there are now fewer total homes in contract than a year ago. Both the weekly new contracts and all the homes in contract pending stage are below last year. So the housing market is on hold until mortgage rates come down. When will that be? I have no idea. We knew that mortgage rates could come over 7% for the year, and here we are. I still expect we'll spend most of the year under 7% for the 30-year fixed rate mortgage, but until that happens, home sales are at a standstill. There is signal that the price that buyers are paying is declining too. So I'll share some of those signals in a minute. So home sales are slow. So inventory of unsold homes is building. Condo inventory is building faster than single family. Some markets are much slower than others. So this week, Thursday, January 23rd at 10 a.m. Pacific, we'll have our hour-long Altos HousingWire webinar. In it, we dive deep into the data. We hit the local markets to watch, the leading indicators. If you need to understand this housing market, join us Thursday. These are limited to 1,000 attendees each month. This month is filling up fast. You can still reserve your spot. There's a link in the description below to register. So click that, save your space now. That's Thursday, January 23rd at 10 a.m. Pacific. Okay, let's look at the Altos Research data for this week, the middle of January 2025. There are now 632,000 single-family homes unsold on the market around the U.S. That's up 1.25% from last week. It's almost 25% more homes unsold than a year ago, 25% more than a year ago. As I mentioned, inventory of unsold condos is growing faster than that of single-family homes. There are 177,000 condos on the market. That's 30% more than a year ago. So this view is of the last 10 years of inventory trends in the U.S. Slowly, the number of unsold homes is climbing back to the old normal levels. You can see that maybe later this year we get to close to the old 2018 levels, which I've highlighted here. Also notice that the market spends 4 to 6 weeks at the lows where we are now before inventory climbs again for the spring season. It's not uncommon for inventory to tick up in mid-January like it did this week. The holidays are over. Some of the spring listings come out, and there are not a lot of sales yet, so inventory picks up. It's also common for inventory to dip again before the end of the month. And you can see that in each year's pattern here on this chart. Inventory growth for the spring usually starts the second week of February. When the market is hot, like during the pandemic, there were more buyers and sellers in Q1, so inventory kept declining until March or April. But normally, we expect that transition week to be in early February. So one signal I'm watching with this current market is whether inventory builds starting now in January. So if next week inventory is up again, that'll be another signal of weak demand as a result of the high mortgage rates. Our model expects inventory to tick down next week. It would be normal to do so. So stay tuned next week and we'll see if we get another signal. Inventory is building because of weakness in demand, not so much because of supply growth. In fact, it seems like the higher mortgage rates are holding back new listings a little bit too. So there are only 46,000 new listings for single-family homes this week and another 7,000 immediate sales. So those immediate sales are those that get listed and take offers within a few days. So they're already no longer in active inventory. All in all, there were actually 2% fewer sellers than the same week a year ago, but 3.6% more of those new listings are unsold than a year ago. So slightly fewer sellers, but inventory is building faster than last year. So in this chart, we're showing the unsold new listings each week. Each line is a year. At the left end of the chart, you can see that 2025 year taking shape. The dark line shows unsold new listings above last year. This market has fewer immediate sales too, so inventory is building. So there are two risks for the housing market that we should be able to look out for in the new listings data each week. Are there too many sellers or are there too few? We've had a bunch of years with too few sellers. Too few sellers keeps the market restricted and pushes prices higher. That's been changing. Much of the last year, there were 5 to 10% more sellers than the year prior. We expect that to continue. But on the other side, if we see a flood of sellers, too many sellers, that would drive inventory higher quickly and could potentially be a trigger for home prices to fall. Now, I don't anticipate this scenario, too many sellers, but as I mentioned, we can see here that inventory growth is from demand weakness rather than a supply surge, but it is always worth watching for. And I should point out that the Los Angeles fires don't really move the needle on the national housing numbers yet. So, for example, there are typically fewer than 10 new listings each week in Pacific Palisades, even at the peak of the summer. So while there are a lot of homes destroyed, the owners of these homes typically do not sell them ever. So the impact of the Los Angeles fires is going to be stretched out over months and years, but it'll actually be hard to see the weekly numbers like the new listings counts here. It was much easier to see the hurricane impact because Tampa and Western Florida have a much more robust housing market typically than California. So that's the supply side of the story. Let's look at home sales. So this is really, the story of the moment. There were 45,000 contracts started for single-family home purchases this week. That's 10% fewer sales than the same week a year ago. That's a very slow start to the new year. Overall, the number of homes in the contract pending stage are just over 257,000 now. That's actually now 2% fewer than a year ago. And I've been talking about this trend for several weeks now, that the weekly readings have been coming in low for a month or so. And so the whole set now in contract, that whole cohort are now fewer. And in this chart, we're seeing the home sales rate as measured by the new contracts started each week. So that these contracts are before sales close. The sale closes. It takes right now about 45 days on average in contract before the sale closes, but the trend is weak. At the left end of the chart, the dark line for 2025 is coming in each week below the last 2 years. This week is 10% fewer than a year ago. In 2024, we counted 49,000 new pendings during the second week of January. This year is 45,000 new pendings. I've commented on this trend for several weeks now. Mortgage rates jumped into the sevens in December. We could see it. Tracking the weekly data can sometimes be tricky because of the placement of the holidays or weather or other events. But after a month or so, this trend is pretty clear. It's pretty obvious that home purchases are on ice until mortgage rates thaw a bit. So that's the transaction volume. The sales growth that we measured in Q4 is gone. And you know what? The home price gains from 2024 look like they've mostly evaporated too. The median price of those homes that went into contract this week, the median price of the newly pending home sales, is $375,000. That's essentially unchanged from a year ago, up just 0.5%. Normally, this time of year, you'd expect sales prices to be moving up each week. You get fresh new inventory. The first spring buyers are looking. That pushes sales prices higher in the first quarter, usually. But this year, the pricing pressure is much weaker. Demand is weak. There's no upward pressure on sales prices. In normal year, home prices rise 5% or so over the prior year. This year is starting out much weaker for home prices than normal years, essentially flat. At the left end of the chart here, you can see the 2025 line taking shape. The home prices can bounce up and down in a given week, so the percentage can change. But right now, it's looking like almost no home price gains. That's different from last year when mortgage rates hit the sevens. So we can see it in the price trend as well as the sales volume trend. Now, the median price of all 257,000 homes that are in contract is $394,000. That number is still 3.6% more than a year ago. So home prices up by 3.6%. That's because many of these sales entered into contract in November and December. So what it means is that even though the real-time signals are flat for home prices, the headlines for January, when the news comes out in a few months for metrics like the Case-Shiller Index, will still show a little positive move on home prices for January. Again, the real-time measure is of the contracts pending, the stage before the sale closes. And the pending price is really the best early proxy you can see for the near future sales prices. But we can also look at the data that is more leading. So, for example, we can look at the cohort of homes that are newly listed in a given week and see where those are being priced. When we look at there, the new listings also don't show much optimism. The price of the newly listings cohort this week came in at $409,000. That's an uptick for the week, but is just 2.5% more than a year ago. So the takeaway on home prices is that everything is under pressure with mortgage rates over 7%. The price metrics have not flipped negative, but they could soon. So we're definitely keeping watch there. When we look at the leading indicators for future sales prices, I usually track price reductions. So this week, the percentage of homes on the market with price cuts eased by only 50 basis points. So there's a slowdown in new listings, and those on the market are doing more cuts. So this does not bode well for future sales prices. Normally at this time of year, you'd see much more strength in pricing with new listings and home sales. And you can actually really see it stalled home buyer demand right now in the price cuts metric. So there are 33.5% of the homes on the market have taken a price cut from the original list price. Last year, it was only 31%, so more cuts now. And the number was declining faster each week last year with more sales getting done. So at the left end of the chart, we can again see our 2025 line taking shape. Notice the slope is flattening already. Demand weakness means that this price reductions line will flatten and start climbing earlier in the season than most years. And it looks like that trend is underway. As I mentioned, this week saw 10% fewer purchase offers than a year ago. That's thousands of sellers who didn't get an offer this week. Many of those choose to cut their asking price to see if they can generate demand. That's why we see this line flattening here. So this time of year, price cuts line normally moves down with fresh inventory. Newly listed homes don't cut their price until they sit on the market for a while. So this trend that we have is now capturing all those that are feeling the pinch of higher mortgage rates. And so we can see that buyers are waiting. Okay, that's all the time we have for today's data. If you need to communicate about this housing market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com and you can now sign up for a free Altos account, get a free report for your local data. We'll help you dive into your local market and start helping people understand the market today. Check that out. Link below. See you on Thursday for the Altos webinar.